Tata Motors climbs more than 2.5% and now 3% higher as the management at the company's analyst meet suggests that Jaguar Land Rover will meet its fourth quarter EBIT margin guidance of 10%, will also turn net debt-free by the end of the financial year.
Brokerage firm Motilal Oswal says its view on the IT sector has turned cautious in March. Infosys and Wipro are the top losers on the Nifty, falling over 3% each. All constituencies of the Nifty IT index trade with cuts.
IndusInd Bank recovers from some ground from yesterday's sharp fall, now up 5%. The management exclusively tells CNBC-TV18 that although there could be some decline in the net interest income in the fourth quarter, the bank will show a profit in the fourth quarter itself. The stock, remember, has also entered F&O ban.
PB Fintech is under pressure today after its board approves an investment of up to 696 crore rupees in its wholly owned subsidiary, PB Healthcare.
Keynes Tech opens with cuts of almost 8%, though recovers from the lows after the company's managing director gets a show-cause notice from the SEBI alleging violations in the maintenance of company's structured digital database. The stock is off the lows now.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam. The markets have taken a bit of a U-turn at the low point of the day as we speak. The Nifty is lower. The good news is the Nifty Bank, that's showing a relative outperformance today. And the reason the Nifty is lower is because of the tech-related names. Take
that point entirely, Nigel. You know, it was due for the Nifty Bank to be doing well today, largely because yesterday's decline was led entirely by IndusInd Bank. And now that the street is digesting that. The important part is that the stock has recovered some ground from yesterday's sharp fall. But then, yesterday we did not see as big a fall in the IT pack as the Nasdaq suggested, but two trading sessions declines in the Nasdaq, and that has had a bearing on the IT index as well. What's really taking place in the US is now impacting this one sector. But IndusInd Bank is definitely the stock of the morning. We have the stock which has recovered about 13 to 14% from the lows itself, currently sitting with a gain of about 5% after a big 27% decline yesterday. And this, remember, as the stock has entered the F&O band as well. We spoke with the management exclusively on CNBC-TV18, and the MD said that there could be some decline in the net interest income in the fourth quarter. The bank will, however, still show a profit in the fourth quarter, and come FY26, growth path will continue. Here's what Suman Karpalya had to say.
During a review of the processes in connection with the compliance to the RBI circular on investments portfolios, we found that there were some gaps which were coming out, and that was really the start of the issue. We found this anomaly around October, and that is where we started our internal assessment as well as we hired an external agency. At that point of time, we did not know the difference, and we knew that there were two deals getting accounted incorrectly, but there's so many deals in that, so we did not know the real impact. And I think as soon as we got to know the impact, we held a board meeting and we informed our board and we did the disclosure. You know what happened. Post that, you've seen that we've been very transparent with our disclosures. I think as soon as we got to know this disclosure, we've come and disclosed it to the market. This is a one-off item, it's not a recurring item, and I think we should take it, we should get over it in this quarter, and after that, I think the bank should be back to the BAU, and you should see the growth that the bank is seeing and the profitability which the bank is used to. The full year will not be a loss at all, and I think the quarter 4 itself also will be a profit.
All right, quarter 4 will be a profit, full year will not be a loss. And yesterday, on account of the decline that we saw in IndusInd Bank, there was a decline in Ashok Leyland as well, a group company. Look at Ashok Leyland right now. That stock's moved marginally in the green to the high point of trade as IndusInd Bank comes out of the decline that we saw and has moved off the lows as well. So we'll keep an eye out on this, but also watch out for a few ideas for profit coming in from our colleagues at Money Control Pro. Neha joins in with the stock.
Today's stock idea is CSB Bank. CSB stock has tanked more than 30% from its 52-week high price seen in April 24. While the fall in the broader market has led to weak stock performance, the correction is surprising as almost half of the bank's loan book consists of gold loans and gold prices are hovering close to all-time high. So then what led to the correction? The muted performance of the bank in the current fiscal so far led to the drop in the stock price. CSB Bank's return on asset declined to 1.4% in 9 months of FY25 from 1.8% in 9 months of FY24, mainly due to sharp fall in margins and higher operating expenses. Net interest margin of the bank has been declining since past few quarters due to tight liquidity conditions and consequent higher cost of funds. Banks' withdrawal from some of the high-yielding segments like microfinance loans, unsecured personal loans, etc. also added to the pressure on margins. Management clarified that the bank prioritized risk management over margin maximization. Thanks to this cautious approach in lending and gold loan portfolio, CSB Bank's asset quality continues to be very strong. Operating expenses are likely to remain elevated in the near term. However, management expects the cost to income ratio to start tapering down from FY26 onwards. On the business front, the bank's performance has been very strong with both advances and deposits growing much higher than the industry growth. Now coming to the valuation, the stock is currently trading at around 0.9 times the book value estimated for FY27. The valuation is very attractive given the return ratios and growth potential on a small balance sheet. With not much concern on asset quality and book value growth, there is no reason why a private bank should trade below book value. Long-term investors can start accumulating the stock.
All right, thanks a lot for that. Well, time to slip into a short break, but on the other side, we'll be joined by Mr. Riju Jhunjhunwala, who's the Vice Chairman of HEG, to discuss the company's proposed value unlocking in Bhilwara Energy. Stay with us. Welcome back. You're watching Chartbusters here on CNBC-TV18. As promised, well, let's focus on that value unlocking that we saw in HEG. Now, the proposed value unlock in Bhilwara Energy, in which HEG currently holds closer to around 49% odd. They have approved a fundraising in Bhilwara Energy to raise closer to around 500 crore rupees, and Singularity AMC is the one that's going to be taking a stake. To understand more about that, we're joined by Mr. Riju Jhunjhunwala, who's the Vice Chairman of HEG. Hi, Riju. Good morning and good to see you in. Give us a few details. What we understand is Singularity will have close to around 9.6% stake for the 250 crores that they're going to be putting in. For the remaining 250 crores, at what valuations will it come in? And post the entire 500 crores, what stake will they have in Bhilwara Energy?
Good morning, Nigel. Nice to be back with you. And this is basically in continuation to the last time what we discussed about the demerger process that we are going through in HEG. So Bhilwara Energy is and HEG Graphite Limited are getting demerged, and Singularity has come into the Bhilwara Energy level right now. And the numbers that you mentioned were exactly the same. So 250 in the first round and 250 in the second round, both at the same valuation.
So both at the same valuation implies that, by the time you raise 500 crores, they would have just below 20% stake in the company. That's Bhilwara Energy that we're talking about, right?
So in Bhilwara Energy, they would have around 17.5% stake to be exact. Okay. And then, of course, the demerger process would happen, post which they would be holding around 12.2% in HEG Green Tech, which is the proposed new entity. And the balance would be between the promoters and the current shareholders of HEG.
And what would the promoter shareholding be in both the companies post demerger?
So in HEG, it would remain exactly the same as what it is today, 55%.
Yeah.
And in Bhilwara, in the HEG Green Tech, which would be the new company. I'm just using the word HEG Green Tech because that is what we propose the new company's name to be. So in HEG Green Tech, the promoters would have held 70% stake because we are also bringing in 51% of our own shares of Bhilwara Energy. So that would have been 70-odd%, but after this deal happening, it would be close to around 60%.
Got it. Okay. All right. So we have got that out of the way as well. Give us a breakup then, in terms of what is this money going to be used for? In your release, you're mentioning that 3,000 crores is the total capex you have for this renewable energy part, green tech part of your business. Break it up for us. I'm guessing anode gets the most, right? So break it up for us, the 3,000 crores. And how does funding come about? Currently in HEG, the listed entity, which has both the two, parts of the business, that's the graphite as well as the green tech business. Currently, there's around 700-800 crores odd. All of the money comes to HEG Limited?
So I'll tell you, Nigel, what is happening is that the reason for this demerger is for us to have a serious play in this whole energy transition space. And the breakup of that 3,000 that you started to begin with, I mean, approximately plus minus 5%, I can give you the breakup. Around 1,800 crores would be in this TACC entity, which would manufacture high-grade synthetic graphite anode for lithium-ion battery manufacturing. Around 200 crores we are investing in the graphene business, which is also, again, a very high-end, and we've already got a team of 7 to 8 PhDs with a lot of patents, etc., for which we'd be going ahead with a facility of around 200 crores. Another 750 odd crores will go into the bottle-to-bottle recycling business, in which basically we would be producing food-grade resins from PET bottles. Around our energy storage business, RE+, which currently comes under Bhilwara Energy Limited, that is seeing a lot of traction in the market, and we already have a 1 gigawatt factory which is operational near Pune. So we are taking that up to 6 gigawatt hour. The work on that has already begun. So around 250 crores would be spent over there. And then, of course, with that particular business, you have a lot of government IPP tenders, etc., that you bid. So we won a recent tender with GUNL, in which around 200 crores will go into that. But that is money that will keep rotating from time to time when the project gets complete.
Right.
So the ideal breakup of 3,000 is 1,800 anode, 700 crores in your food grade bottle to bottle, around 200 crores in this thing, the graphene, and
the battery.
50 crores in RE+.
Got that. So then a follow-up two-part question on that. How long before all of this capacity is commissioned and fully utilized? And the obvious question is, once all of this is, utilized at optimum level, what is the revenue and EBITDA potential?
So for all these projects, we've already procured all the land. The bottle-to-bottle project is going to be coming up in the state of Rajasthan. The technology tie-up, etc., is all on its way. We have been working on this for the last 2 years. It kind of slowed down with the battery prices coming down across the world, as you saw in China in the last 18 months. But now we are in a position to start placing all the orders. And by December 2026, we'll start full commercial production in the anode plant. And also around September 2026, we would have full production in the bottle-to-bottle grade company.
And what's the revenue and EBITDA?
Already is RE+ is already executing orders of more than around 500 to 600 crores. And the ramp up over there and the government traction that we are seeing over there is very, very significant.
So if we were to look at HEG Green Tech, what would the revenue and EBITDA of the company be?
So I mean, in lack of, because, in these businesses, things keep changing every day. But specifically, if you ask me for the anode business, we're targeting an EBITDA of around 700 to 800 crores by the year 2029.
700 to 800 crores will be on what revenues? Just want to understand the margin picture.
On revenues of around 2,500 crores. So you're talking about around 30%.
30%. 30%. So you're putting around 1,800 crores in this anode business. You'll be getting revenues of close to around 2,500 crores, and you're saying you'll do EBITDA around 7.
At 90%. That's why I'm here saying 29.
EBITDA of 700 to 800 crores, correct?
Correct.
And the cash that is there currently in the one consolidated entity, green tech or the HEG limited part of business will get all of that cash. Is that correct?
So we don't get all that cash. That cash will already be spent by December. By the time the demerger happens and the NCLT approval happens,
Okay.
the work is in full flow in TACC. So we would have exhausted all the 750 crores cash that we are talking about into placing all the orders.
So the demerger happens by December. And what does the balance sheet of both these companies look like? You said the cash will all get exhausted. So what would the debt profile of HEG and HEG Green Tech look like?
So HEG would be a HEG Graphite, if I were to use the word, would be a debt-free company. And even the Bhilwara Energy, which is today debt-free, we have cash of 300 crores lying in its books. And obviously, it's a very, very valuable asset for us. 300 megawatts of run-of-the-river hydro plants. So you've got a constant EBITDA of 125 to 150 coming in from that as well. So as and when these projects start getting implemented, obviously we look at 30-70 kind of a debt equity ratio.
All right, Riju, thank you so much.
But for the next 1 year, we would not be requiring any debt for any of these.
Okay, all right, Riju, we'll have to see how things evolve. Just a quick question on the graphite business. Will you be able to comment? Is demand as strong as you all expected? Have you seen any kind of price increases?
Manish would be the better guy to comment on that. But from whatever I've discussed with him this morning itself, I mean, next year we would be operating 100,000 tons and we would be close to around 80-85% capacity utilization over there. And for the first half, the demand remains a bit sluggish, as we've been talking. But the second half, all the graphite companies have announced price increases. So we should be able to full,
Got it. All right, Riju, appreciate you joining in and giving us all the details about the green tech business. When you'll report your Q4 numbers, we'll catch hold of Manish and ask him about how things are panning out for the graphite electrode business as well. Thanks a lot for joining in. For the time being, we'll slip into that short break. Come back, we'll continue to focus on markets and stock-specific action.
Welcome back. Even as the Nifty is down about 90 odd points, led lower by the tech index, the mid-cap index is down by about 1% as well, currently at the low point of trade. Let's get in Chandan Taparia, who weighs in on his, weighs in on the market with his opinion. Chandan, quickly, your thoughts on the indices and stocks.
Good morning, Manglang. Thanks for having me. So the market has been consolidating in a range and finding support near 22,300, but at the same time, sustained supply is clearly visible near 22,600, 630 zone from last 5 days. So the follow-up is missing, and the weakness in selective counter and the Nifty IT is making the market to see the selling pressure at higher level. So again, it's going to be tough for index to hold, but good part is that Bank Nifty is holding. So as of now, I'll be having the neutral stance or will be trading the broader range in between 22,200 to 22,700 zone, and market is likely to be volatile in this broader range. Now looking at the Bank Nifty index, some recoveries seen here. Bank Nifty has managed to hold, led by buying in HDFC Bank and Kotak Bank. So here with support of 47,700, one can place some recovery towards 48,500 level. So compared to Nifty and Bank Nifty, I'll prefer to go long on Bank Nifty, but Nifty looks weak. So can make the pair trade also, buy Bank Nifty, sell Nifty, or can avoid the trade setup as well. Now looking at the stock specific, we have to be with mix of buy and sell. Positive on the oil marketing company. Looking at the price behavior of the crude in last few days, the BPCL is our preferred pick, which has bottomed out in the last week and witnessing some sustained buying interest. The stock is holding well above its key moving averages, so one can buy BPCL with support of 260 for an upside target towards 282. And second trade will recommend on the sell side, that is sell on Dalmia Bharat. Structure is weak. We have seen liquidation of long position. Stock is trading at multiple months low level. Price breakdown is at the worst to break the counter down by 5 to 10%. So one can sell with hurdle of 1660 for the downside target towards 1520 levels.
All right, Chandan, thank you so much for that. Sell on Dalmia Bharat and a couple of other stocks as well. Supply coming in at 22,600 for the frontline index. With that, we'll wrap up on this edition of Chartbusters with the news that the Nifty bank is in the green, not so much for the others. Thank you for watching.